Hello, everybody. Brian here for quantlabs.net. In this video, I want to go over the Coinbase trading bot results, test results, that is. No paper, just paper trading. So, if you've seen my videos recently over the, let's say, last week or so, with the markets kind of going flat, also with the recent experience with Kraken, the US exchange, with the 5-day support response has got me back onto and reactivated Coinbase a week ago. So I've been posting a lot of Coinbase bot investigations. I'll be doing a webinar tomorrow night on May 8th, March 8th. So if you want to watch that, it's posted on my blog. Anyways, let's get into my results. I have posted this a day ago. Video for those on the podcast. That's why I'm doing this video again. It's called Flat Cryptocurrency Market, but these are what are trading. So these are all the hot positions, even though it's been kind of flat. Majority of 2020 was like that. So I just want to go through this again. Today is March 7th, 7 p.m. So here is, I'm going to put up the today's chart table. So in here, this is kind of a little different, differently laid out. Has the exit and entry positions here, the symbol, time and date of that mock trade, the P&L for that position, the return on investment it brought, and then I also have a rolling return on investment for the day as well. Also, that's important is I've updated my weighted average to include the top 10 coins that are traded only on Coinbase. So I factored out what I used to do is have Bitcoin, Bitcoin Cash, Ethereum, Litecoin, and Ethereum Classic. So now these are the coins that I've included. These are currently the top 10 coins on Coin Market Cap that are traded on Coinbase. Now this could have changed, but these are Ethereum, Uni, XLM, Link, Atom, Aave, Bitcoin Cash, Litecoin, Bitcoin itself, Litecoin, and then WBTC. So that's what that weighted average contains. It's a lot more accurate, and with that, I can see the relationship between the P&L on certain positions like the losses are due to the fact on very weak weighted average at that time when that position takes place, whereas down here you can see the P&L can be much higher on the positions. So there is now, where it's adjusted, more realistic, you can see that relationship there in a better way. So here what I've done is I've included a rolling or a running total return on investment for the day. So this would start obviously midnight for the day, and then it would continue. So I'm going to show you the pattern that I've seen with Coinbase. Probably could say the same with Binance. There are some major advantages with Coinbase, obviously for Americans versus Binance. But I'll cover that tomorrow night in the webinar, and that's going to be available for everybody live on the stream. Beyond that, I'll be part of my paywall. So in here, what I want you to notice here for the return on investment, what we're dealing with here is what we call basically probability. What is the probability we will achieve a daily target? Once you have that daily target achieved, the question comes down to, do we shut down the day for the trading? We set a goal and we just shut down the trading for a day. It's probably the easiest, the most effective risk management tool out there. A lot of people will argue it. I'm going to show you about 5 days worth of these reports to show you the challenge you'll go through if you go against that. So here on this position, the total here has been reached at 0.98%. So it's pretty close to the usual 1% on a daily target on your trading for the day. And that's today being Sunday. Yesterday, I'll show you that as well for Saturday. Now remember, to compare this against the commodity trading or even stock trading, you only have 5 days a week. With Forex, you kind of get 6 days, whereas with crypto, it never shuts down. So you have this extra 2-day advantage to boost your trading results if you find a winning bot. So the goal here is to try to achieve the 1% based upon what I'm seeing and just shut down. But then on the other hand, you will reach these periods where once you break through that 1%, and if you let the thing continue to trade, what's the probability it will go beyond the 1%? In this case, we won. It went from 1%, now we're at 1.94%, so we almost doubled that goal. So that's fine and good, but if you tried to set this every day and just shut down at 1%, what are the odds, if you were to continue to let the bot continue trading, that you will, in this case, as you can see here, not only did it achieve 0.98%, but it continued and it went pretty close to negative. No, it just dipped a little bit, but I'll show you other instances where it did go negative. And you can see here that when you look at the weighted average, it was overall a very weak day up until, I'd say up till this point here at 1645, and it continued to increase to 1.51. That's the weighted average. So that's strong. Where you get really strong is anything over 2, and it can go up to, the highest I've seen is 7. So, but the odds of that happening are not very often like it was in the last few months. Just the last week or so, it's tapered off. So that's one factor that you can consider. And then, of course, using the overall weighted average. To be honest, you don't really care what's being traded. Your ultimate goal is to reach that 1% for the day. So let's move on to the previous day, yesterday. And again, this is a day you wouldn't typically be trading. But here's a totally different scenario. Here you can see a very strong weighted average day. Okay, but the return on investment was did not correlate around that. Like, that relationship's definitely broken off. So coming back to that situation of, let's say you do achieve your well, you already see it right here, 0.48% on your second trade, and then from that day, from that period on, it's been nothing but declining on the overall ROI, and it even went negative. Okay, so imagine if you just stopped there, and that's a probability at 0.5%, maybe you should just shut down and not trade anymore. But you can see what happened here. So it went negative at around 1:27 a.m., even though the markets were strong. With the markets strong, you would expect there to be more profit with a higher weighted average, but clearly it's not the case. And that is because when you look at the coins being traded, there's usually some extreme volatility taking place, since the coins that are performing may not have enough price stability to get you a profitable position. And that happens a lot on both Binance and Coinbase. And I can't really say anything about Kraken, but that's a very important factor you have to take into account when you want to trade the weaker, smaller coins on those exchanges that won't have enough momentum to keep the price stable when you take on a position so you can get a profit. You can see what clearly happens. You're going to take a lot more unnecessary losses, which brings down your overall profit. So in this case, now you're fighting the deal of probability again. Do you stop trading up here because you hit a certain goal of, let's say, 0.5%, or do you take the risk, allow that overall ROI to continue to drop, go negative, and what's the probability that the market will come back and then start to beat that 0.5% in that case? So here you can see that the maximum we reached was here at 0.87, but we still, for the day, had to go negative on the total ROI. at 15:45. So do we take the chance to continue trading for the day, and just by chance we can beat our peak before that time for the day? In this case we did, but then it dropped back to 0.5%, and that's what we ended up with as our last trade. Fine. But again, this is what we're battling with now, just normal conditions with extreme volume, or sorry, volatility in the market, factoring in volume, what kinds of coins are performing, This one was probably the toughest day on the 5th of March. So I'm just showing you the different scenarios here. So we out of the gate go negative, slightly positive, and then we start to go really negative, okay? Right here at around 13.14, okay? So the question is, well, we're now down, let's say down 2.5%, and then we start to come back to profit, but we're still down 1%, 1.2, 0.52, down 0.12. Guess what? Just by luck, and I'm just saying by luck, or we call it probability, at 13.56, we started to go profit again. Okay, so we close out the day with what? Down at negative 0.12%. So anywhere along here, we could have easily stopped trading for the day. Okay, we're dealing in the same day where we hit negative 2, 2.25%, 2.5%, and it did start to the ROI started to profit. Okay, and then you look at what happened was we were up a little bit, slightly up a little bit, or not really, and we went down again towards midnight. So, and when you look at the weighted average here, it's pretty positive all throughout the day. So again, there's a breakdown there. So my whole point is you cannot factor in these different relationships, because you have a strong trading day that you're going to get when you take on trades that you know you're going to pull off higher probability of profit, and that's what you're fighting against, is basically probability. When you go down, what's the probability it'll come up? Not only that, what's the probability where you'll hit throughout that day? You'll hit your trading either trading target or peak or ROI for the day at some point. So this is my whole point, that because it's so volatile here, especially in this example on the 5th of March, is that you can clearly see you got to set daily trading targets. Okay, and once you achieve them, shut down. I mean, if I had reached set a goal of let's say in my case 0.5%, you clearly see we don't ever achieve that at all. We get kind of close here at 13.57 at 0.41%. So you got to factor in your weighted average. You got to factor in your P&L for the day, and your winning P&L versus your losing P&L as well. So there's all these factors you got to take into account. Another example here is on the 4th. Here you'll see that the weighted average didn't start getting properly calculated until this day. Okay, but still, I'm still totaling your ROI for the day. This is another weak day, goes negative, pretty severe. Okay, and at some point, you got to ask yourself, at what point are you going to stop trading so you don't take further losses? So what I'm saying here is you can clearly see, right? Okay, so here we break through that 0.6. We reach 0.67. We break through the 0.5% goal if we set it at that, based upon either one of two things. Either the weighted moving average is very negative, as you can see here, or you take your overall P&L for the day, and if it's fairly weak, stop trading once you hit, let's say, a conservative daily target, 0.5%. If the markets and the profit continues, let it run, and stop at some point. What I'm finding, based upon these examples I'm showing you, on a really negative day, either on the weighted average or on your P&L for the day, you're probably just happy whenever you achieve 0.5%, stop trading and wait it out to the next day. Because in that case, when you look at your overall P&L on your portfolio and you prevent these kind of losses, guess what? You're preserving your capital. That's the number one goal in trading. It doesn't matter what type of trading, investing, that's the whole goal. If you set a daily target, that is very clear. Last day here for March 3rd, I just started tracking this, but we don't have the weighted average here. We can see here overall the total ROI is looking pretty good. We hit our daily profit here at 1%, but we hit it at 21:30 time, and then we hit it, and then we start to decline again from 21:31 to 22:17. We start to decline. So the question is, at what point should we stop trading along here? So the question becomes, you can clearly see most likely this was an okay day to trade, but the weighted average overall for profit on all the coins I just showed you that make up that weighted average, it was weakening. So if that's the case, stop trading here. Yes, you'll miss out on these little profit, but probability will say, which it did, started to decline. So to retain your max profit is set your upper daily target of maybe 1% and stop trading, and then doesn't matter after that between, in this case, if we hit 1% at 21:30, and it doesn't matter what happens trading wise between 21:30 and midnight that day. So it's pretty clear this is your ultimate way to preserve meet your trading target levels based upon trading conditions and your trading results as well when you dip into the market. So there's that. Let's look at the number of trades we would typically take here. You can see here, well, let's look at a full day of yesterday. So today, or yesterday, had 56 positions. If we set our daily target of, tough to say, you could also factor in, well, let's say right here. So it would have taken you 31 positions to reach very close to a 1% daily target. So that's what we're looking at, 31% of trades in that day to make that happen. So here, the 5th, this was pretty well like a bloodbath, really. It was nothing but negative. Maybe here as a peak, so that would have taken 45 positions to reach 0.41%. So you're looking between 30 to 50 positions a day, I would think. Here's another full day report. So here we are, yeah, it's been mostly negative here as well. Right here. So that would have taken 20 positions, or 20 positions to get to 0.49% as your peak. So that's your number of positions. Just thought I'd put all that together for you. We'll leave it at that as well. Thanks for watching.